Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Friday, March 3rd edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, we're going to recap fun yesterday in Snapchat, closed the day up. Also going to talk about that Caterpillar news, a couple earning stocks to discuss, and some stocks and ratings land as well. Two guests for you today. Efim Hoffman at 8:15. He's the founder and CEO of Running Alpha Capital Markets Intelligence. And then at 8:35, we're going to have Rod Casil on. He's a trader and also the head of product management at Collective 2. We're going to talk about what both those firms do when our guests join us at those times. Joel, how are we doing in the S&Ps this morning?
I think there's something wrong with my computer again. The S&Ps are down 4 1/4, 23.77.75. Have not seen the closing price at 23.82. That's my bogey on the upside. On the downside, pre-market low 73.75. Nothing significant to there. Wednesday's low 63 1/4. Crude, it just couldn't hold. Got up near that 54, 55. Looked like another breakout. Instead, it's a fake out. Crude back down here, up 4 cents today at 42.65. I am looking at a potential double bottom here. You can see the lows from the last 2 days. Gold and silver continue to decline. Gold down $4.90. Silver now well under $18. It's $17.73. Dennis, how are you doing on this Friday morning?
Pretty good. A little bit surprised that the buy the dippers didn't come in yesterday, Joel. There was no saving that market yesterday. We had a sell-off everything market.
And we were discussing in the pre-market show, available by subscription only, that we have not had, I was looking for 2 down days, haven't had 3 down days here since the end of January, and those were minimal down days as well. So here we are embarking on our second down day, and we talk about the whole number theory. I guess 2,300 wasn't much, but 2,400 was, basis the S&P futures. The all-time high at 2,401.
So question here. We're down 2 points. Do you actually think we're going to close in the red and have our second consecutive down day today?
Yes, I do.
Really? Joel's getting bearish again. He's entering the bear train. I'll take the opposite end of the bet. I'll bet you one of the 3 lunches that you owe me that we close green.
And Dennis is giving up the edge because I got this.
I am. I'm giving up 2 points here.
Wow, you are feeling.
Look at that. I'm even giving you an edge here this morning. I think we close green. Maybe I'm wrong. Maybe it's going to be follow through here and we're going to get ugly. I think we could have a little bit of a washout, at the open, a little bit of follow through. You know how I like my 2-day move, but I just think there's too many buy the dippers lurking here yet. I don't think they're scared enough yet. They might be scared on individual issues, but this overall market they jump into. So yeah, right now I think you owe me. How many lunches do you owe me right now? Isn't it like 7?
It is only 3. And you know what? Did you forget Auntie Jeanette is speaking today?
Oh, man, I did forget that. That could throw a wrench in my plans.
Yeah, and let's see. I mean, foregone conclusion, I think the probability is like 90%. But the thing is, are they going to go a half? Are they going to go a half?
They're not going a half. You're starting bad rumors. There's no way they're going to go a half. I do think they're going to go a quarter, though. But obviously, it's still just, so where is she speaking at?
Chicago? It's Chicago Investors Club or something like that?
She keeps her cards pretty close to her vest there. I don't think she's going to really spill too much there at that meeting. Yeah, or do you think she wants to warm the market up?
Can they do 3/8, or do they have to go a quarter?
They can do whatever they want, but they always do.
I'm telling you, there's something
cooking. They trade in quarters. The Fed trades in quarters.
All right.
That's the minimum tick variance that they use.
Okay, so we'll they're not high frequency yet, but near the end of the week, near the end of the earnings season here, there is at the end
We
of
got
the
two notable earnings to talk
sure.
about. One's going one way, one's going the other. Let's go to Costco from last night. COST is getting the beats here. It was not a great report, and the stock was kissing all-time highs just as of yesterday. Well, now it's 8 points off those all-time highs. Stock's getting tuned for the tune of 4.5%. Spencer, what were the numbers?
So we have Q2 EPS of a buck 17 versus a buck 24 in the same quarter last year. Sales 29.13 billion versus 29.86 billion. So they missed on that number. They also reported Q4 comps are up 3%, and they're also increasing their membership by $5 a year.
Thoughts about this drill? Thoughts, concerns? As Costco down 4.5 or percent here this morning?
Not much of a bounce off that 69.10 low. I don't know if I'd be sticking that there. If you take out the 69.10, say hello to 68.17. That was your low on February 9th, and then another couple lows at the 167 area. So, I mean, not buying it down here on the first attempt, but if I had some weekly puts or something, I'd sure like to see the trading action at the pre-market low of 169.10.
And then going the opposite direction, we got Big Lots here. BIG reporting earnings here this morning and getting a nice lift in the pre-market. I guess they were following Burlington Coat Factory's lead there from yesterday because that BURL took off, broke out, and off to the races. BIG, Spencer, the details.
Q4 EPS $2.26. That beat by 4 cents. Sales 1.58 billion versus 1.59, so they missed a little bit there. They see their Q1 EPS at 95 cents to $1.05. That's 5 cents above the estimate, which was 90 cents. Their fiscal year EPS, they see that at $3.95 to $4.10. That's in line with the estimate. They also report Q4 comps up 0.3%.
I mean, it was a good enough report. Big Lots hadn't really done too much heading into the report from a technical perspective. And it's funny, you get the technical analysts there, you can see the little cup and handle, and they'll say, yeah, the cup and handle works here again. I'll say, it's just a good earnings report, so I don't know how much of the technicals. I don't consider technicals at all when you're going into an earnings report. Technicals take a back seat. But Big Lots here jumping up, and now we can talk technicals here again because we're after the report. Joel, what do you got?
Someone wants out at 55 here. That's been the high over the last three brackets. That coincides with the high they have at 54.83. So there, we'll see what the price action is at 55. Above that, if things open up to the upper 55 handle, 55.98. So a couple whole numbers there, 55 and 56. And just be careful, because did you see what Broadcom did yesterday, Dennis? It
Nope.
opened up and it ran.
Gave it all back.
Yeah, it did. It gave it all.
It was one of those days you didn't want to be reporting good earnings on it unless you're a Burlington Coat Factory because obviously we had selling across the board yesterday. I mean, why do you think? Okay, this is one of the first days for a while going back to the big broad sell-off yesterday. Why do you think buy the dippers didn't come in yesterday?
Why?
Because we had the huge rally the day before and it was just kind of a little bit of a give back day. Like they
Yeah.
come in every single day it seems like, but they did not come in yesterday. Why?
I think it's because of Yellen speaking today. I really do. I really do. I think the
Market's a little nervous that rates are going higher.
Yeah, and how much higher? I think that's the reason. And plus, I mean, another 100-point move in the S&Ps, gap and go, everything was up. I mean, in order to haven't had a 300-point up day in a long time. So I just think a little bit of profit taking in some of the issues. Can we cover NTNX because Hunter 69 asked about it, and Dennis, I know you're going to say. Good report, but guidance trumps all. Let's just take a quick look at what's that new.
Well, let's get the numbers
report.
There from
Go ahead,
Spencer on
Dennis.
this one.
Or go ahead, Spencer.
So 28 cents. The estimate was 28-cent loss. On the Q2 EPS. They beat their estimate there by 7 cents, which was a 35-cent loss. Sales 182.2 million versus 178.38. So they beat the sales number. The Q3 guidance came in worse than expected for the EPS, and the sales guidance came in pretty much in line.
And that's good enough to knock the stock down 20% here today. Cloud services stock not on cloud number 9 here. This is getting the beats. Just one of the biggest losers on the loser board.
23.98. That marked your pre-market low. Trying to hold the $25 level. This is like an IPO that hasn't been around that much. I mean, what I'd be keeping an eye on over the next few days. 24.80. That was your December of last year low, but all-time low 23.11. Only a couple bucks from there. We'll see. I wouldn't be stepping in until at least I see this thing holds 23.11.
Let's just jump over to a few other stocks here. AMD getting a little bit of the beats here this morning. Secondary, it looks like here, 45 million shares being offered. Hearing the pricing on this is 1370. It's actually trading below that pricing. Not sure if that's accurate or not, but AMD obviously got hit pretty hard there yesterday. Now a little secondary here today, knocking the stock down 2%. What do you think here on the technicals in AMD?
Dennis, why don't you just give your secondary speech?
Well, often those prices act like a magnet and the stock price will fall back to that, but it wasn't even much below there. And I mean, it is only 45 million shares too, so it wasn't a huge number there. So I don't know if it applies, but normally when you talk secondary, usually those prices act like a magnet. Let's say stock closed at 1450, they do a secondary at 1370. Usually the stock will pull to that price. We're actually trading below that price here right now. So, the magnet trade, I'm not sure if it applies, and the stock's actually below it, but
Resistance now.
1370.
It's resistance
I
now.
guess. So you can still say, yeah. So maybe.
Yeah, resistance here. Good time to do a secondary. I mean, incredible increase in the stock price. Given its shareholders, let's see what the takers are. Not only, I think that'll be a good short-term number, but a good long-term number as well. Coming back on the downside, got a gap to fill in the lower 13 handle, so we'll see if they'll get to the whole number 13 today.
I mean, it got hit hard. I mean, this market was hitting your leaders there yesterday, and AMD has been one of your leaders, and obviously NVIDIA has been one of your leaders as well. And NVIDIA got hit pretty hard yesterday, too. A little bit of follow through again here today, probably a little bit in sympathy with AMD. We know those two stocks like to trade with each other, and AMD down 2%. We've got NVIDIA trading down 0.75% right now in the pre-market, but now that NVIDIA is below 100 here once again, I mean, we've snuck down through this a few times here now. Is it starting to get concerning to you that we keep going back down through $100?
I wish we got a little more of a pop off that low. I was looking for that 50% retracement and get back into that gap area. Heck yeah, I'm concerned. I mean, if I was a shareholder of this, I'd back under 100, back under triple digits. Now you're going to have offers coming down. The big level, which you don't want to see taken out if you're a shareholder of NVIDIA, is 95.70. That marks the low of the move, and I remember looking at the charts on this. Nothing to the lower 90s if that is taken out. So NVIDIA could be in a little bit of trouble.
One day we're going to teach you how to say NVIDIA.
Oh,
or
I'm
NVIDIA.
sorry.
You're going back to NVIDIA again.
Well, who are we talking to?
You have 50, what are you now, Joe? 53 years of, seeing something like that, and it's no. And, I get it too. I used to say it too. I have trouble. I have to consciously tell myself NVIDIA or NVIDIA. Ace was the first to alert us to that, but that's what they like to be called. I think they like the NVIDIA because like innovation.
Yes,
and
don't they?
Yeah.
Yeah.
But there's no I after the N, so you can't say no.
Yeah, wasn't there? Who are we talking to at Traders Expo about that? Well,
we talked to Ace about it. We talked to a lot of people about the pronunciation. I think it was like the topic there. We always pronounce it wrong.
But all right, a big story here. We only got 2 minutes before Efim Hoffman comes on, but bad news in the Caterpillar. Spencer, you want to recap that horrible news?
Yeah, they got raided yesterday by, it was actually 3 different federal agencies. It was the FDIC, the IRS, and the Department of Commerce carried out a search warrant yesterday at the headquarters there in Peoria, Illinois. Caterpillar did issue a statement saying that they are cooperating and that the warrant was broadly drafted, but they believe it's executed with regarding to, among other things, export filings that they had disclosed previously in their 10K 2 weeks. I'm sorry, this is 2 weeks ago. They had updated their in their latest 10K. They had disclosed this originally in 2015. Probably related to accounting issues. Well, obviously, but so that's basically it. It was obviously we won't know what they found for a while, but that's as far as the story goes from what I see.
I mean, this scared the hell out of the market. The stock was trading around $98, and then Kaplooey, I said it for you there, Joel, down to 93. So losing 5 points in a matter of just about 25 minutes. So did bounce a little bit to close at 94. It's a little bit of follow through. Maybe your Johnny come latelys reading the headline saying, I don't want anything to do with this. It's too big of an unknown. So often you do. That's why I like my 2-day move. You get a little bit of a follow through here this morning. I don't know. This is, a little bit out of the ordinary there to just say the buy the dippers are going to come right back in here on something like this because there is a lot of unknowns with this.
And then you had Commerce Secretary Wilbur Ross on CNBC this morning saying the raid was part of an ongoing probe. So we'll see.
Yeah.
We'll see what
Yeah.
happens.
None of that sounds great.
Just a quick comment here. I'm just looking at this $92 level, several lows in that area from a technical perspective. I was discussing with Nick on the desk here. One thing Wall Street doesn't like to hear is accounting issues. I mean,
No.
that's one thing I learned that on early on in my stock career.
How's Kramer, too? He always says that.
Yeah,
Kramer.
when it comes to accounting. All right, it's 8:15. We're going to take a quick break and bring on Efim Hoffman, CEO and founder of Running Alpha Capital Markets, a fintech guy here, and he's got a lunch coming too. We'll be right back with Efim.
All right, I'll let you guys run with this.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel behind the glass. We got Efim Hoffman on the line, CEO and founder of Running Alpha Capital Markets Intelligence. How you doing, Efim?
I'm doing pretty good. How are you doing this morning?
Always good on a Friday here, but we first got to get it out of the way. Not only do I lose lunch bets to Dennis, but I lost a lunch bet to you as well. Once again, me on the bearish side. Recap it for us, Efim.
Anyways, well, the market basically looks like it's going to continue on with the direction of where I was seeing the market going. I think originally I made the bet with you for 2,600 at some point this year, and then when you challenged me to that bet, you kind of wanted that bet to be around the FinTech award. So I decided to, you know what, I'm not going to go for trying to win a supper. I'll satisfy myself with a lunch at 2,300. So.
And I think
backed out of one.
Yep. I think back then the index was around 2,200. I took 2,100, and I don't know. 2,100. I'm looked at. If this was after the election, I might have gotten that. But anyways, let's move on. Let's look forward. Let's see what you got in your forecast here. You're going to be talking about sector rotations, trends, industry themes. Big run in the S&P. Can we have 2 down days in a row? Update us with your targets on the S&P 500.
Sure. So looking at the S&P, we have a lot of sector trends driving it. And, one of the big arguments lately is, between passive and active investing. And, valuations, everyone's saying, are rather stretched. But when I look at the individual equities that are doing really, really well in the S&P, there's still a lot of them that are really undervalued, that are driving the index higher. So for the S&P, I continue to see the market. I mean, there'll be pickups because usually when you start breaking out to new highs, you start also expanding in some volatility. But I wouldn't call it bad volatility. It's just volatility that's necessary to fuel the next leg up. So in my work, from a secular point of view, like the 2320 area and 2304 are major intermediate term support areas. So if there was any kind of event coming out of an FOMC meeting or something announced in the Trump administration that the market didn't like, it would, if we did get down there, it would be like a one-bar wonder, similar to what we had back in November when the market went down overnight of the election and then immediately bounced back. So I'm not forecasting a sharp 80-point move back to the 2300 area. I'm just saying that that's an area where, in addition to holding a portfolio long, that if you have some extra cash, that's where I would look to see the bulls win out again if that happened. But the reason why I'm bringing up that area is because there's going to be a lot of media talking about, how the S&P is going to roll over and everything is going to be a disaster if we had like a little event like that. And as far as I'm concerned, that would just fuel the fire to new highs. And I'm expecting some kind of really, really short term. There's some cycles that kind of come in the around the March 9th to March 13th, somewhere in there. Like, I don't want to be too exact, but those aren't the important ones. That's more like, short, really, really short-term volatility, and that's only if a negative event happens. If there isn't, then the market just continues trending higher. The more important points to focus on would be the end of April and into, say, the second week of May. It could even prolong into like May the 20th, like the third week. But the point I'm trying to make is that a lot of sectors and sector rotation trends that have been taking place, a lot of those cycles peak in that period. So I'm not saying that is the high for this year, because I still see banks leading the way on a relative basis compared to other industry groups all the way into August. But I think it's an area where sell in May, go away could be the theme this year, and then coming back sometime in the summertime, second half of the year going into August, where we could get another run in the banks.
All right, you got a couple different sectors here. So I'm going to give you the sector, and I just want one or two picks here from each of them, because you got four or five here, and I also want to get to the Chicago Quant Trading Show that you're going to be attending. So tech sector, give us a couple picks here that maybe have been neglected or breaking out and just are going to continue to move higher.
Okay, well, I definitely got one that matches that exact criteria, neglected. I would say, about a couple of years ago, like before, Microsoft got involved in the cloud, a lot of people were saying, is it really, is this just an old name that's never going to really reignite? And it did reignite. So I have another name from the past that got neglected. And that's Cisco Systems. Okay. Cisco Systems, for the longest time has been in a very, very, just saying a long trading range from 2015, where it was trying to push up and break out, but it was never able to do it until recently. So, like back in September, we had our first chance of a breakout that happened, but then the market basically consolidated. The behavior performed fairly well on a relative basis, like where a lot of other stocks, going into the election, pulled back significantly. This one had a very shallow pullback, so on a relative basis, it was actually showing some strength. But finally, in the week of February 13th, we had a decisive breakout on Cisco. And now we're continuing, to do quite well. Even with yesterday's pullback, Cisco was holding in quite well. And I don't see this as a short-term move. I see this as a secular move with real industry trends and capital spending cycles driving this move. What's going to make Cisco, not just from a technical point of view and behavioral point of view, go up, but also from a fundamental point of view. there's a huge capital spending cycle taking place in one of the most innovative spaces in tech, and that's the Internet of Everything, or they call it the Internet of Things. I think GE calls it the revolution for industrial internet. I think I talked about that in one of the prior shows. But the main point I'm trying to get across is that Cisco used to just be a networking company, and now they're really getting into this new type of computing called edge computing. It goes by a few other names. It also goes by the name not just cloud computing, but fog computing, and also fringe computing. And what that means, and the difference between that and what it's going to do for tech and innovation is huge. Like in the old days, cloud computing was the idea of moving applications and storage into the center of the network in order to limit bandwidth problems, on the local servers, so that businesses could scale. But what's happening now, because everyone wants to get onto the cloud, the bandwidth of communication to the center of the network is getting really, really clogged. And also with the advent of mobile technology and big data, keeping track of a lot of information at the local sources, what Cisco is doing is they're basically developing technologies that are going to build out this computing at the sources from the center of the network, and allow a lot of the computing to take place at the fringes, and then the machine learning that allows those technologies to handle the information periodically at the center of the network. So only occasionally does the learning take place in the middle, and the rest of the time the smaller computations take place at the edges. And it's a really hard market to crack into, and Cisco has really been doing a great job doing a lot of pilot test studies in different cities around the world, and they've got connections and a very wide moat that other companies don't have.
All right, give us one in the healthcare sector. It's been beaten up. Give us one issue in the healthcare sector. We're up against the clock, so give me one for healthcare.
Well, actually, I think the best way to play healthcare, I'd rather give you an ETF.
Okay.
In the healthcare space, and just give me 1 second. It is the XHE. And one thing I always try to look at is what's the best way to express a move in the market. And a lot of ETFs have very poor tracking error with respect to to what they're trying to track. And the XHE happens to have a really, really nice setup, even better than the IHI. So healthcare equipment is a little more general than just medical supplies or medical instrumentation. So this one recently broke out, and the XHE, which is the S&P Healthcare Equipment ETF, is currently at 55.65. On my work, it broke out of 51.90. There was a secondary breakout of 54.43, and it looks like there's a lot of bullish activity in this one that's likely to play out going into the May period. And then if there is a pullback, we've got 53 as support, and then another high likely going into the early summer.
All right, before we let you go, you're going to be at the Chicago Quant Trading Show, where you were invited to be on a panel regarding the Trump factor. So just tell us about that and the new physics of perception arbitrage. Why wait for the information to arrive if you can create it? Recap that, then we'll let you go.
Sure. So, at the Chicago Trading Show, I'm going to be basically debating with a number of other panelists regarding the effects that Trump is going to have on unintended consequences due to some of his policies. And just to give you a preview, like one of the major themes is going to be regarding like the tariffs and the impact on foreign policy and trade wars and how that might affect innovation. So right now I do see this market going higher, but I do believe that as we go into into the middle of the year, there's going to be a lot more volatility and some fallout coming from some of that activity on that front. In terms of some of the technology that I've been working on in the crowd physics space, it's actually a new innovation in finance called perception arbitrage, and the idea behind it, which is quite different than technical analysis and quite different than behavioral analysis, is that it actually looks at human and machine decision making and tries to look at how there's a delay between what people actually see on different timescales and how quickly they actually act on that information. So it's not a matter of just price impact analysis that a lot of high frequency trading firms try to look at and say, hey, how could we gauge, when how quickly information is going to be processed in price. This has more to do with the idea that if an individual on a certain time frame happens to see a certain event, then they're going to make a decision to act on that event, but they're not going to all act on it at the same time because different decision makers have varying amounts of capital and they can't implement all that capital at once due to liquidity constraints. So it takes into account liquidity, different perceptions and different time frames, and feedback loops between distortions in price, distortions in the fundamentals, and distortions in how quickly you could actually process information, and then works out the logic behind it rather than just aggregating information in a binary way. And it gives you actual reasons why the move is happening on different scales and how long that move is likely to last, which is partly why I was able to make that assessment last year that that the market was going to actually push to a new high.
Efim, we're up against the clock here, so
sure.
I got to let you go. Efim Hoffman, CEO and founder of Running Alpha Capital Markets Intelligent. If you have any questions, you can email Efim at efimhoffman@runningalpha.com. Thanks a lot. We'll speak to you again soon.
Thank you very much. I enjoy being on the show.
All right, it is 8:32 here. We're going to bring Dennis in here for a quick look at imbalances. S&P's still pretty much where we started the show at 23.
We just started bouncing around. I noticed Bank of America had some crazy oscillations there. I'm not sure if we had some news. Some of the other financials were bouncing around there too. But look at the chart just in the last 3-4 minutes of BAC. Got tanked and it actually traded down there. And then it rallied and traded down. And I actually just traded a little bit of stock myself. But, I don't know. Was there news that broke on Bank of America, Spencer? It really chopped around. Can you show the pre-market chart there, Joel, on BAC?
On BAC, hold on one second. We're having a couple of charting issues right now. BAC, I don't see any news right now. No, I just see the spike down. What you see?
Yeah, it spiked down twice. It spiked down to Joel. What was the pre-market low right there? That's a big move for BAC.
Somehow.
It was happily trading up about 1%, then boom, it just tanked 1%, and then it rallied, and then it tanked 1% again, and then it rallied. Do you see it?
No, because somehow I optimized Skype here, and I have a big picture of Skype on here. The new trick.
Anyway, I don't know what just happened. Bank of America just got chopped around. I'm not sure if that was just some algo or if that was something else going on there, but I just saw some pretty good chop in some of the financials. So just be aware if you're trading those. If you want to go to imbalance land, why Joel can hunt down
All right,
that
I got
chart.
it. I got it. I don't know how.
Throw it up there on the screen because it was pretty wicked there for just about a minute. Just chopped around.
Let me go to the minute.
It almost
chart.
looked like it had news.
News.
I'm not seeing any, so I don't know.
Well, what's the imbalance in it, Dennis?
There's nothing. It's not posted. So I mean, sometimes designated market maker doesn't post it right at 8:30. He's just not at the post to post it. So I can't see that, but it really spiked around there a little bit, just because it's notable. Just go to the pre-market chart and just show those oscillations. What was the low right there?
2507.
Yeah, it was trading at 25.38, went down 25.07, went back 25.35, and then back down to that area again.
Yeah, maybe just a little fat finger, maybe
I don't
pre-market
know,
trade.
maybe. It was really weird. But I'm just looking. Some of the other banks are starting to roll over here now. Citigroup just all of a sudden has given back. The banks are starting to look. They've been up all morning, and they're starting to roll over here a little bit. So not sure if there was something said. Maybe somebody said something on interest rates somewhere. It almost looks like something was said on interest rates because now I'm just looking at some of the other banks. Look, Citigroup was trading in the green, although Citigroup was downgraded today, and now it's trading in the red. Goldman Sachs just went to the red. It was trading up all morning. So something went on here. Somebody said something about interest rates because a lot of the banks just actually turned into the red.
All right, we'll hunt for that. Meanwhile, we're going to take a break. Bring on Rod Casilli, derivatives trader, head of product management at Collective 2. Talking a little fintech with Rod.
All right, welcome back, traders and investors. This has been Zynga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. We're on the line now with Rod Casilli, Take Two. He's a derivatives trader. He's also the head of product management at Collective 2. Rod, how's it going today?
It is going great. Thanks, guys.
Thanks for coming back on the show. We had you on, tried to have you on last week, and we had some major internet connectivity problems, so do apologize for that. But tell us again, for our listeners who weren't tuned in, what exactly does Collective 2 do?
Yeah, so Collective 2 is a marketplace where independent traders can connect with investors. So we pride ourselves on allowing traders of all different types of backgrounds, whether they're point and click or fully algorithmic, to connect their strategies, their platforms, the way they trade to Collective 2. We track your track record, and then investors can come in and see that public, out of sample, walk forward, real track record and decide whether they would like to get access to those trade signals. So it's a two-way marketplace where traders and investors connect.
And you described it to me as sort of like an Uber for finance. So how exactly how exactly could I use Collective 2? Would I just kind of like connect it through my brokerage account? How does one use the platform?
Exactly. So it is a two-sided marketplace. There's two different experiences, and being in one camp doesn't prevent you from being in the other. In other words, I guess you could be an Uber driver, and you could also occasionally get into an Uber car if you needed to go somewhere. So on the trade leader side, the traders, there's a number of different ways in which they can publish to the platform. They could connect like their interactive brokers account, and we would track their trading there. They could write to our API. They could send an email. So there's many ways in which they can actually publish to the platform. For them, they charge a flat fee for access to their trading, and that's the model for the trade leader. On the investor side, you come into the marketplace. You can look at all the various portfolios and trading systems, and if you found one you like, many offer free trials. You could try it in a SIM account, and then when you're ready, you could connect it, to your live brokerage account. We support about 20 different brokers currently.
So I guess then through the platform, you've seen a lot of different strategies people are using. I'm wondering if you've observed any particular trends since you've been at the company, but also in your own trading in the past few years with regards to how people are trading and what's working.
Sure. Well, the market never goes down, right? So that's what you do. It's trend following, or you sell volatility. No, but in all seriousness, I think what you see on our marketplace is probably trade leaders that are using more derivatives, if you will, than the average person. So a lot of futures and options are used. You'll see a little bit more short selling of those types of instruments. So that's a little bit of a trend. I would say that the vast majority of the wealth management advisory market is very much stock long only. But more active traders, of course, experiment with all different types of instruments and trading styles. So We probably see also a little bit more what I would say prudent use of leverage. Again, that would have to do with equity options and futures. But then overall, it's an active trading environment from the trade leader perspective. So people go where the action is. Snap was really popular yesterday. Anything that's sort of moving and that gives opportunity for alpha or edge is the types of strategies that you'll typically see on Collective 2.
So, can you just speak a little bit more to the idea, the whole idea of like following someone else's trades is something that I only first heard about, a few months ago. It seems, it seems like a good idea to me. I'm wondering what kind of reaction you've gotten because the whole theory, the whole idea of just like subscribing to another trader's trades, and then like, or being a trader that has subscribers following your trades, it seems interesting to me. So can you speak a little bit about like the reaction you've gotten with regards to, how people are using that?
Yeah, well, Spencer, I would say that the first reaction we get is similar to yours, which is how come I didn't know about this, or how long has this been around, or is this real, or tell me a little bit about these traders or their backgrounds, or how did this all come about? I'll say on the investment side, it was really important, and we spent a lot of time at Collective 2 making sure that the investors' accounts were still very much self-directed. So it's important to point out that if you use Collective 2 as an investor, you're granting access to a trading strategy to connect to your account, but it's completely self-directed on your side. You can turn it off and turn it on at any time. You could close a position if you didn't like it. You could resize something. It's very, very transparent. You don't send a check to a money manager. The money never leaves your account. It's in your own brokerage account. So that provides a lot of comfort, I think. I mean, the typical model, if you're working with an advisor or something and they say, hey, you should be in this hedge fund or you should be here, your money actually leaves and goes to that place. It can be very opaque. Sometimes you don't even see what's happening only on a quarter by quarter basis. So this experience is very much like just your average looking at your brokerage account like you normally would. And then on the trade leader side, it's something to be aware of. I mean, many passionate market participants, I think, want to find a way to either get access to more capital or to verify that they're good at what they do, or to find ways to benefit from their trading edge. And all those opportunities are available on the platform. They're available also in another kind of neat way. Typically, if you want to call it money management, right? It's all based on assets under management and fees, which are going to zero. This is a different model. It's just a flat subscription-based pricing structure. It's very easy both for investors to understand and for trade leaders to understand the benefits for them.
Now you're also, a trader. You trade your own account. So,
Yep.
I'm looking at your Twitter feed, and you frequently tweet about, about the market. I'm wondering if you have any thoughts on the rally we're in right now, and how you're approaching it, as the manager of your own account as a trader.
Yeah, it's a good question. I think that what I find, and I had also run trading rooms for a long time. I had done a lot of training and education, mostly on options and futures. Us active traders, we always want to try to short. It seems like we're short more often than we should be, and the whole trend is your friend. Don't fight the tape. All those things. It's very hard to pick a top. So what I'm seeing in my own trading right now is I just have to let my strats and my models run. My trading is fully algorithmic, so I have about 50 different models, and the choices that I make are, do I want that model to run today in this particular market environment or not? And I've continued to second guess myself. I mean, the move that we saw after the speech this week, I mean, look, I think that caught everyone off guard. It wasn't necessarily that I was short, but I certainly wasn't long enough because I just didn't let the model do it. If I just turned on the trend following model, it would have been a great day. So, we've all been doing this a long time. It's hard to ever know what tomorrow is going to bring. But I think if you have models or if you have things that are trend following, it's certainly run with it until those trends stop.
Do you have an opinion on Snapchat?
You mean as a stock right now?
Yeah,
Or just
yeah.
as a company?
I'm just curious. It's all people were talking about yesterday.
Yeah, I think it's kind of overheated. Look, it's not my demographic. Technically, it's very difficult for me to do much with IPOs until I have about 60 days of data anyway. So, I don't use the product. I'm not very familiar with it. It seems like those IPOs tend to mark not only tops for them, but little market tops as well. But as soon as I have about 60 days of data, I can tell you. But looked like an unsustainable kind of chart so far.
And then I guess last thing before we wrap up, I think you guys are going to be at the Benzinga FinTech Awards in May. So can you speak a little bit about the fintech space a little more broadly? You guys are sort of in this, like I said before, this sort of new age, using traders to generate their own allowing people to generate their own following via their own trades. Have you seen other companies try to do this sort of thing, and like what's like the next iteration of this business that you're in?
Yeah, well, I mean, backing up for just a moment, of course, everything I say is pretty biased for the way we're looking at the marketplace right now. But when I look at the fintech world, and I don't know if this is exactly representative of everyone that will be at the award show, and yeah, we're looking forward to it. It's going to be in New York in May, I believe. Is that all the money seems to be chasing fixing indexing, and it doesn't seem like indexing is broken, meaning that we have Fidelity, we have Vanguard, we have low cost mutual funds, we have the SPYs, we have the Qs. There's plenty of ways to index, and we can argue till the cows come home about whether when active does better than passive, and whether Joe Vogel is always correct that that you should index, but you have all these robo advisors that are beginning to threaten the traditional advisory space as well, and they're just the same thing. I mean, I joke. I mean, what is Wealthfront or these guys? They seem to me just to be Vanguard with a mobile app on the front. So we're trying to tackle something I think is a lot harder, which is the alpha problem. I think everyone agrees there's an alpha idea generation problem. In terms of the competitive marketplace, I mean, I think it's just really starting, because unlike Uber, it's a lot easier to drive a car around than it is to have edge and consistent profitability in the market. And we understand that challenge, but we're tackling the alpha part of it, which we think is a far more interesting part of the marketplace than just trying to, again, shave off basis points on index funds, which is, it seems like that part of fintech has tried to convince the market that that's the only thing you can do, and we just don't believe that.
All right, we've been on the line with Rod Casil. He is a trader, but also the head of product management at Collective 2. You can find more about that site by going to collective2.com. Rod, thanks so much for hopping on today, and hope to see you in May at the FinTech Awards.
Spencer, thanks. It's been great being with you guys. Thanks, Dick. Thanks, right. Dennis. Thanks, Joel.
All right.
All right.
All right, guys. I brought up Snapchat because we didn't talk about it today at all. Joel, I know you love looking at those IPO charts.
All right.
I did pretty good on that bet, though.
You did.
Oh, actually,
what was that? I said 25.
I forgot to mention that. I forgot to mention that, Dennis. You called that one pretty
I missed $5,
good.
I think I said 25 and it opened at 24, but it was at like 25 in like the first second too.
Yeah.
Like on the opening candle, it basically was 23.5 to 25. It looks like, so I touched my price on the opening candle.
You did very good. Props to that, Dennis. You did very good.
All right, I can definitely give you support and resistance in Snap here, and I'd say the resistance is at the all-time high of 26.05. Support at 23.50, no doubt that that's the all-time low, and the closing price of 24.48. Keep an eye. I think that's the more important number because more volume traded, at and around that area. I know I'm not a huge VWAP fan, but we know Kenny Glick is, and if he's listening, he could give us the VWAP on that. But 24.48. Did you see the tweet from Nick yesterday, Dennis?
What did he say?
Now I'm pretty sure he said it to Spoos and Triple D Trader. He said, number 31 snap tomorrow, 3-3. So he's looking for 31. I might have to fade that. 12 in 6 months is what he said.
It says the pop and the subsequent drop is what he's saying.
And
it's a 12 in 6 months that I noticed from his thing. And you know what? I don't know where this thing is going. We talked about it yesterday. Their goal isn't even to make profits here right now. Their goal is to just build the platform there. And I don't know much I don't use Snapchat myself. My wife uses it. I know a lot of people that do use it, but is it a 24? What's the market cap now, Spencer, at this price? Do we know what the market cap is at $24? The $24 billion.
I saw it here at one point.
What is the market cap
it's
here?
28
billion.
28 billion.
$28
sounds
billion
right.
at the closing price. I mean, okay. Cool platform, but $28 billion. I mean, we saw, not comparing Snapchat to Twitter at all, but the buzz and everything when Twitter got up to these valuations, we know when the dust settled, it was a hell of a lot lower. And I know Snapchat has a lot of users, but Twitter actually, is trying to figure out how to monetize and make money with it. Snapchat isn't even worried about that. So if I won't pay $11 billion for Twitter, I'm not going to pay $28 billion for Snapchat.
Yeah, I mean,
So I'm out.
Yeah.
Maybe it's a good one. It's like the Dragon's Den. Maybe it's for somebody else though, not for me.
Well, one thing I would watch is to see who's investing, right? So Andrew Ross Sorkin just said that NBC Universal invested $500 million during the IPO. So I would watch who is investing in Snapchat, and then I'd also watch the lockup dates, right? Well, we know that.
Yep.
I was looking at a chart of Twilio.
Great point.
I mean, Twilio's all-time high was the first lockup expiration. I mean.
Yeah, great point. Do we have those dates?
I think it's.
They're usually like 3 or 4 months out, aren't they?
So there's two. I think it's the 3-month and the 6-month. I think. I'm not positive on that, but I'm.
What everybody says, all the insiders and all the directors, get me out of this stock.
Yes.
I want to profit at the $28 billion market cap.
Hey, Dennis.
I'm out. This is too. It's too pricey for me.
I was speaking with Anthony yesterday, and that comment that me and you are citing, he says that's like in every prospectus.
The comment regarding that they may never be profitable.
May never be profitable. He was, and I didn't do the digging here to find what the actual quote was, but he was kind of looking that it was.
May never be profitable, but it wasn't about whether they'll be profitable or not. It was that they didn't care about profitability. That's what my concern was. It wasn't specifically.
I don't know if
that,
said that.
All right, well, we'll dig. I mean, I remember
dig on that quote. Like obviously, companies can't guarantee profitability, and we weren't talking about that. I was concerned, like I believe it was said that they didn't care about being profitable.
No, I don't think that's what they said.
Okay, well, if that's the case, then I'm not as concerned. But either way, I don't even care. $28 billion. I'm not paying $28 billion for some platform that you don't know if it's a fad or not. So it's too much money for me to pay either way.
Dennis,
my opinion.
You know why I'm so quiet on this snap? Because you remember when I wrote the articles about Facebook and coming out, and I was so bullish, and it went down, and I never really fully capitalized on it, and then I got on the Twitter train, and then the Twitter turned out to be wrong. So I'm just
you and social media don't match.
I'm just not that good on these IPOs. So I'm gonna
social media stocks.
Yeah, the social media stocks. So I will let you and Spencer steer the boat on this one, and I will strictly stick to the technicals. You guys can ask me about it every day. We could, just like we did with NVIDIA, right?
NVIDIA. You still got to put the "n" there. You can't.
Close enough.
What did NVIDIA?
You got to get the "n" there.
That's
You
fine.
can't get away from the "n."
I gotta put a big sticker up or something on that phonetically spelled.
Close enough.
He doesn't know. He'll never. He
can't
missed
even
his
do it.
window period.
How about
for
Vidya?
saying NVIDIA or NVIDIA? Just think like the letter N in the alphabet. Say NVIDIA.
Okay, I'm putting a big sticky.
So
up.
I don't know why they don't say NVIDIA either. So I'm on board with you. I wish it was said that way, but they don't call themselves that. So
Okay,
we're gonna talk about this every day because you're gonna say the name wrong every single day.
Costco, let's do a quick Costco update. Not good earnings, but you know what? You're bouncing off the low here. Pre-market low 169.10. Getting a little reprieve off that. Now, when you have a spike down like that, and then it was an after-hours trade, and you hit a level like 3 or 4 times, I mean, the more importance it has to me. So I don't know. I don't know if you're going to see that 169.10 today. Air down to 168 after that. Short-term resistance, and I mean minor, is at 171.
I mean, everybody is talking. I just just quickly, even on Twitter, and I see this, line everywhere. It says they warn that it may never be able to achieve or maintain profitability. I'm not sure if that is in every prospectus there. May never be able to achieve or maintain profitability. Maybe it is, but a lot of people have been talking about that statement, so it makes me think that it's not in every prospectus. I mean, you can warn on maybe you'll never be able to be profitable, but pretty blunt there. So.
And also, I want to point out that they actually amended their S1, and the lockup is actually 12 months.
Ooh. Mm-hmm.
I'm seeing for a certain class of shares. So Yeah, normally it's like 90 to 180 days, like you said, Dennis. I think we're looking at a year.
How many
Long time.
how many Snapchat? I mean, just how many Snapchat users do we have in the chat here? I'm just curious because I know me and Spencer, you have it, right?
Yeah, I use it.
Okay.
Yeah.
I just wondered, pop in here. Let's take a quick look at Palo Alto Networks. Got plowed here off its earnings report. And
Yeah.
let's see here. Ooh, 115 here. I mean, if you want to try a swing trade, if you have a little appetite for risk here, 115, a nice little double bottom here, 115 even, 115.01. So, if you're looking for there's, try it, or else if you get a little dip under 115 but come back above it. But someone's making a stand here, 115. Yesterday's high is way up at not way up, 117.78, your short-term resistance.
Imbalance look here once again. They've actually grown quite a bit. There's a few notable ones here too. I don't know if there's something going on in Salesforce.com or not, but CRM has 218,000 shares to sell here right now, and the stock is trading down $1.15 in the pre-market. So that is very significant for CRM. It's been a long time since I saw a sell imbalance like that. Last time I saw a sell imbalance like that in CRM, they were rumored to be buying Twitter.
Okay. All right. $81 if it's opening up there. Here I see one low right at 81 and then another double bottom here just under the 81 level in Salesforce.
Any other notable balances, Dennis?
Yeah, Caterpillar 72,000 to sell, so you are seeing the Johnny come lately follow through. You know how I like my 2-day move. You're getting it right there this morning, obviously following through on Caterpillar. Pfizer 165,000 to sell. It's trading slightly in the red there. Merck 42,000 to sell. I'm just kind of flying through them here. I'm looking for the 6-digit ones. That's probably it. There's some small ones like Coke 62,000 to sell, HPQ 50,000 to sell, Johnson Johnson 46,000 to sell. They're definitely more seem to be to the sell side than the buy side, which is interesting because the market is almost flat here now. So
yeah, I think the spoos have only moved about a point here, point and a half during.
We had volatility for one day.
Yeah, get the VIX up and right back down. Dennis, I just want to get your opinion on a couple charts here.
Sure.
Ford and GM here. Is this Ford looking itchy to you? I mean, if it didn't go up that day that it had, the market went up 300, makes you think it never will. And look at this 1277 area, and then GM. And we talk about this when it hits a resistance point and backs off, but the level it backed off. Now GM has hit 38 5 times here over the this year. But this time it closed at 37.76 and now trading up a little bit in the pre-market. So 38, man. If you can get in the 38 handle and stay in there, things could open up here for GM. Just wanted to get your take.
I'll tell you the Ford, and so many times people look at technicals, and you can look at technicals, and you see how many times it gets up to the 1275, 1276 area and backs off. You just have to look at the book. And I look at the book, and it is littered with offers and sell orders, at 1275 or 1275, 1276, 1277, 1278, 1280. So there's 60,000 1274, 320,000 at 1275, 80,000 1276. I mean, it's not that significant. It could shoot through there if there's one big institution that wanted to make a play in it, but it's going to take a big institution to probably get through there. So it's going to take somebody that wants to buy the stock. And then, if you could get above that 1280, then it starts to open up to 13. So that's your bogey. Really, it's hard to buy the thing until it can break out over that 1280 area.
Okay. All right. We got about a minute left here. We covered the imbalances. If there's any other issues here, Tracy C is popping in with LITE. Now, this stock, it was been on fire. I think this one is going to been rumored or will be part of the new Apple iPhone, the curved glass. Kind of like the pullback here. Hit 53.70. Now you've pulled back under 46. I'm not sure if we're getting any pre-market trading in it. Getting a little bit of a pop, but certainly finding a little bit of support here under 46 after that run to 53.70.
I got one.
Got to hold 45.
I got one. GNC up about 8% this morning. Deal Reporter says KKR has been looking at a potential deal for them.
Okay.
I mean, that's the only thing that's probably going to lift this thing is, that's the wild card. If you're still holding on to GNC and holding out for hope, that's the hope, that they might get bought. So it's not surprising that it would lift on that. I mean, the stock is in a world of hurt. Amazon eating their lunch there. I'm not sure they can make it by themselves. That's the question. Shareholders, I think, have made that bet by knocking the stock even the last 3 months from 20 to $8. So, if it gets bought out, different story, but I don't think I'm jumping in there and saying this company's turning it around.
All right, Dennis, we're going to wrap up the week here with Spencer. What a week it was out there in New York City, but ready to relax, have a good weekend. Spencer, you want to wrap things up and preview Monday's show?
I mean, looking ahead to next week's slate of guests, we've got Blaine Reckensmeyer of StockTraders.com, Dan Zenger coming on Thursday, Paul Mladenovich, we love Paul, so he's coming on Friday. He's the Raven Capitalist.
Yes.
So we got, and of course we got Nick, Tommy, the usuals. Mike Vienne from Vetter will be on, crowdsourced stock rating service. He'll be on Tuesday. So pretty good slate of guests for you next week. Hope you enjoyed today's show. Please remember that all the information, material, and content is for informational purposes only and not meant to be investing advice. Have a good weekend, everyone, and we'll be back with you folks on Monday morning.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.